The latest meme stock rally is fizzling, and speculative buying by retail investors will wane through the rest of 2022, according to some fancy person from Wall Street. If you're an ape, a retail trader investor supporting the movement, you see headlines like this and you probably start screaming to the high heavens, but let's see what they're talking about. Let's see if it holds any weight or if it's just another misinformed mainstream media Wall Street analyst. The buying craze surrounding meme stocks, not only Bed Bath & Beyond, in the latest round is slowing down, and retail investors are likely to start reducing overall stock purchases through year's end. We expected to see a figure in the 1.3 billion to 1.4 billion range, especially as engagement picked up substantially thanks to the latest meme stock rally. Furthermore, the lack of intraday rebounds at the market open is indicative of weakening retail demand, which we suspect is a function of the fresh losses in meme stock trading. It could be, but also I kind of find it interesting of mainstream media, mainstream financial media, they can't have it both ways. On one way, they're saying retail small, there's no influence on the market. So like kind of forget about them. But then on the other hand, they're saying that actual market moves throughout the day. They're like, no, this is indicative of retail not buying back in. You can't have it both ways. And it's interesting, they'll argue both points to kind of always look down on retail, like, nope, they're selling out, they quit, they lost money, and they're no influence. And then in the other way, they're saying, well, no, we're actually not bouncing now because retail isn't having their money come back in. So no matter what way, and both are contradictory inherently to each other, I think it's always funny of how they're going to argue both, but whenever they do it, it's always in a negative lens. Retail investors face a crucial inflection point as summer draws to a close, noting that the average portfolio held by retail investors has started declining. The overall drawdown of the average retail trader is 23%, close to the levels in March of 2020 when the pandemic was unfolding. With this, I kind of want to know the bucket that they're paying attention to, because if we're just talking about retail, not all of retail is like hardcore ape diamond handed hodlers. I would say that's an important subsect of the overall retail community. I mean, I know a lot of retail traders who are very wealthy, great at trading, and they just play the market just with their own money. And then on the other side, you do have a lot of people who bought into the whole ape cultural movement, where they bought what they want and they're just going to sit there and hold and hold and hold and hold. And I don't think it going up or down in the short term really will have any influence on that hodling. So I kind of want to know actually the different subsets here, because I think with this, it's kind of painting all of retail as a monolith. And to me, that isn't that accurate. Nevertheless, the meme stock sell-off is now causing a reversal of that outperformance, basically because Ryan Cohen rugging Bed Bath & Beyond. The pace of the retail purchases in the current craze failed to reach the prerequisite exponential growth necessary for a solid meme stock rally, such as AMC in 2021 or GME. There's many that like would be an example here. I think they're actually talking about like, this is the argument of the chicken before the egg before the chicken type of a scenario. What I've seen, what we have all seen in real time, at least in my opinion, is when it starts to go, people start talking about it. They start talking about it because it's up. So then people buy more and then it goes up more. And it's just this FOMO thing. It very quickly becomes a self-fulfilling prophecy. And this is kind of the argument of, well, hang on, no, there has to be more people buying and then it'll go up and then we'll see craziness. Or you could argue on the other way, well, okay, maybe it'll go up and then a lot of people will buy, when in reality, I think they happen simultaneously. I think it's just like a little bit of movement and then people start looking around and they're like, well, maybe I'll buy too. And then because some other people buy, it goes up a little bit more and then it gets quickly out of hand. And that's where you see these explosions. And the most recent one was Bed Bath & Beyond. Unfortunately, that particular movement fell flat on its face because Ryan Cohen sold 100% of his position after knowing that everyone saw he was recently loading up on a bunch of call options and he got out for 68 million, which, hey, for him, that's a great trade. But with this, the retail, the subset, the ape community, I think it's just a lot of cultural buzz of people saying, wait, there's a money-making opportunity. They see it go crazy, and then they want to get in, which inherently makes it go more crazy. With this, will it wane through the rest of 2022? To answer this particular question, I don't think anyone really knows, but just to like say that so confidently, that's the type of attitude that got Wall Street caught before. Whenever they're like, nope, this is retail, we know how it's going to go, we think that they're wrong, and it's going to end because of XYZ. Well, I feel like at that most cockiness or assuredness, for lack of a better word, that's when they get screwed, because out of nowhere, I mean, this most recent go around with BBBY, that's exactly what happened. It seemed to come out of nowhere and it went absolutely crazy. So I don't know. With this, will it wane through the rest of 2022? I mean, they could have their opinions, but opinions are one thing, and then the market and making the right trade or the wrong trade is completely different. And I definitely care about the latter rather than just saying retail investors will reign through the rest of 2022. If things calm down and then equities start to go up, I think we're going to see a massive amount of retail traders, investors return to the market because they're not going to want to miss out on the fun. Obviously, those are my thoughts. I would love to get yours, but it just seems like another day has come and another piece of news about just how retail is retail, and it's always in awkward negative sentiment. But just wanted to share with you and share my thoughts.